Welcome to the December 2022 episode of the Pre-Sale Pulse, a real estate show dedicated to everything happening in real estate across Metro Vancouver and the Fraser Valley. I'm Ryan Lalonde, and in our very presence today, worth more than all the Christmas presents in the world, Emily Canada's very own saint of the sales and marketing, Susanna Gonsalves.
Nice. I don't think I've ever been called a saint before. I like it.
You're welcome. So Suze, why don't you kick us off with just a quick read on the economy? What's going on out there?
Gladly, Rye. Starting off with interest rates. We're filming this on the day of the latest Bank of Canada rate announcement, and like the markets, we're relieved to see the more moderate 50 basis point announcement. Although there was some talk of potentially even smaller 25 basis increase, this is still down from the previous aggressive 75 or even 100 basis point hikes we've seen earlier this year.
Yeah, it's just a little bit funny, Suze, that at this point, because of the previous pace of hikes we've seen, we're actually welcoming this one, right? And in the end, yet another rate hike. And what's to come, I think, is the big question on all of our minds for January and February.
Yeah, you're absolutely right. Clearly, Macklem and the Bank of Canada are seeing promising signs in recent inflation reports, but not quite enough to ratchet it down even more. Supply chain problems have resolved to some degree, and many lagging components of inflation that had previously declined but were not showing in CPI reads are now beginning to show, and so we're seeing that reflected in the rates.
Yeah, and that's absolutely right, Suze. We're seeing this in the bond market as well. 5-year GOC bonds, which serve as a really good indicator of long-term interest rate expectations. They fell approximately 60 basis points from their high in November. That's a significant shift and talks about the future pricing that the market's responding with.
Yeah, along with it, fixed mortgage rates are beginning to come down as well. This will give relief to buyers that have so far been watching from the sidelines. Economists in Canada are now widely expecting that the Bank of Canada is nearing the end of the tightening cycle with a forecasted terminal rate of about 4.25 to 4.5% by February of 2023.
I think also of interesting note is how much time we spent looking at economics and interest rates over the last 60 days. Feel like you are an expert.
I'm not sure I would say an expert just yet, but I've definitely spent more time thinking about interest rates in the last, 6 months than I probably ever have. Now, what remains to be seen will be the actions of the other central banks, most of which are also contending with inflation problems of their own. The U.S., for instance, has been benefiting from a strong dollar, decreasing the cost of imports and therefore reducing inflation. Yet they seem ready to continue a more aggressive path than here at home.
Now, among many other reasons, Suze, I think Canadian central bankers are more sensitive to interest rates increases due to the proportion of debt Canadians hold and the sheer proportion of Canadian GDP that the housing and the mortgage markets make up. It is different than what's happening south of the border, and the relationship is going to continue to play out in the coming months. We're going to keep a close eye on this.
Looking at our pre-sale market in November, 9 pre-sale programs launched over the month. This is higher than what was previously expected and included strong launches across product forms.
Yeah, that definitely takes off some of the previous predictions that we'd made on the previous month's Pre-Sale Pulse episode. And for the most part, I think reference SoCo 2, Amazing Brentwood Tower 6, both of those being major programs that did come to market over the last 30 days. SoCo 2 is the latest launch that is part of Anthem's one price program that has so far done very well in the marketplace. The project has sold about 55% of the inventory after launching at a very affordable rate, $1,025 per square foot. That's really shifting the landscape of our marketplace.
Yeah, about 70 homes were part of the one price program, and that relatively sharp price point compared to other product along the North Road corridor definitely fueled their success.
Yeah, rewinding price points back to late 2020, early 2021. Now, it also seems that sales volumes are a priority for Anthem, and they're willing to sacrifice price point to get there. Initial pricing suggests that this trend is going to continue in South Yards, which is priced below any other program recently launched in the Burnaby North marketplace.
So same month absorptions were about 28% in November, while down from September and October. This aligns with the activity we saw in the summer and should be expected given the downshift of the overall market activities as we head into the winter months. All in all, 28% same month absorptions in this market. It's actually quite decent.
It feels far better than what the headlines are having us to believe.
Yeah, agreed.
Now, looking into December, we're expecting the year to wrap off with 4 launches, roughly 303 units to be exact, entering the market. This is going to include Galilea in Surrey, Sitka House in Port Moody. Sitka House actually began writing last week. Some really interesting outcomes that they've generated from that program. We're going to continue to track and we'll report back next month.
We're also hearing lots about Italia by Solterra developments in Vancouver on the west side. This program has begun touring and may start quietly doing deals this December before a more public launch in the new year. No doubt they were likely paying close attention to Form by Anthem, which also recently released homes in that South Granville area. I suspect they're dipping their toe in to see how much depth of market there is before pulling trigger in the Q1.
It certainly makes sense to follow out from a strategic standpoint, right? If there are buyers in that marketplace, they are limited. Those are small pools. They're doing their very best to pick from Anthem's activity. Let's shift our attention now to the resale market, Suze.
Yeah, well, right now we're seeing what you might call a low simmer. Resale activity in Greater Vancouver was effectively at a 20-year low in November. We saw just over 1,600 transactions, down about 15% from October and nearly 50% from the previous year. Of course, last year was a banner year.
Yeah, hard to compare, but still notable. And of course, important to put these numbers into perspective. Interest rates have had an immediate impact on our market, and 6 back-to-back rate increases since March. It's been hard for those transacting in our market to catch a break, and I think that part of the buyer sentiment we're experiencing in the marketplace is absolutely tied to what is happening with rates for the last 6 months, and we're getting more and more clear about what that looks like for 2023.
Of course, people have compared demand today to levels in 2008, but there are some key differences. For one, Canadian unemployment was above 8%, which is actually a big difference to the 5.2% we saw in October. In addition, inventory is less than half of what it was in 2008, with inventory falling this past month as well.
Not to mention the strong economic activity that we've seen, allowing buyers who may be impacted by higher lending rates to hold out for better market conditions in the spring or fall of 2023. Looking at prices, the composite benchmark price fell for a 7th straight month, and we're now seeing 1-year price changes dip into the negative territory. That's a first in a very long time.
Yeah, but before anyone gets too excited, the 3-year change in Greater Vancouver, including all product types, is still up over 25%. So although we will see prices drop a bit more before things plateau and come back, we have a long way to go before anything becomes suddenly affordable.
So something bought 3 years ago for $400,000, today it is still worth $100,000 more than what you purchased it for.
Yeah, exactly. Now, for those who have cash to spend, it is a good opportunity to pick something up near the bottom of the cycle. Not surprisingly, we're seeing condo prices remain the most stable and resistant to the changing interest rates, given its entry market price points.
Yeah, so true.
All right, Ryan, I think that sums up the real estate intelligence for this month. Be sure to subscribe to our channel and Newswire, our daily email roundup of the latest real estate news. Our internal MLA advisory team is active in all major markets, providing actionable intelligence across Canada. So reach out to us using the links below.
Also, be certain not to miss out on this month's trending topics. We're going to cover some of the key periods in 2023 we anticipate having a huge impact on the market, and also some of the strategic decisions that home buyers and home builders will be making in the months to come, hopefully well in advance of them actually happening. Thank you to all our viewers for tuning in, the Pre-Sale Pulse this year. Happy holidays. See you next year.